What if the artificial intelligence boom isn't a revolution at all, but a ticking economic bomb? What if the companies shaping our future already see a collapse coming? In the next minutes, we uncover why OpenAI, Nvidia, and Microsoft are quietly seeking protection and whether China is already overtaking the United States in the global AI race. Artificial intelligence was expected to spark a new industrial revolution, smarter machines, stronger economies, and limitless innovation. But beneath that promise lies a different reality. Inflated valuations, political influence, and an energy demand growing faster than the world can sustain. In the next 50 minutes, we'll break down how major players like OpenAI, Nvidia, and Microsoft are reshaping global power, and why the race between the United States and China now depends on who controls the infrastructure behind intelligence itself. Stay with me until the end, because this hidden struggle may reveal why the AI boom could become the biggest financial bubble of our time. Artificial intelligence has become the new gold rush of the 21st century. Every major corporation is pouring billions into AI systems, promising a revolution that will reshape everything from medicine to defense. At the center of it all stands Nvidia, the company whose chips are now the beating heart of the AI industry. In less than 3 months, Nvidia's market value soared by over $1 trillion, making it the most valuable corporation on Earth. Its GPUs power the largest AI models, OpenAI's GPT, Google's Gemini, Anthropic's Claude. But here lies the paradox. While Nvidia is earning record-breaking profits, most AI companies are losing money. A recent MIT study revealed that 95% of AI pilot programs inside US corporations have failed to generate profit. Billions are being spent on computing power, infrastructure, and talent, yet very little returns. It's the same speculative fever that drove the dot-com bubble 2 decades ago, the belief that technology alone guarantees success. Today, that same belief is being rewritten in silicon and code. The stock market has embraced AI as the ultimate growth story, but according to economists, indicators like the price-to-earnings ratio and the Buffett index are flashing red. The US stock market's total valuation now exceeds 220% of GDP, the highest in history. These numbers don't signal innovation, they signal overconfidence. Every boom built on hype carries the seeds of collapse. If you find this analysis valuable so far, consider tapping the like button. It helps this report reach more viewers who are trying to understand what's really happening behind the AI boom. Publicly, tech executives talk about progress. Privately, they talk about fear. Behind the press releases and keynote speeches, there's a growing anxiety that the AI bubble could pop. And when it does, it could take Silicon Valley down with it. Nvidia's CEO Jensen Huang has repeatedly warned that China is winning the AI race. On the surface, it sounds like a geopolitical concern. In reality, it's also a financial warning. By framing China as an existential threat, American tech giants are putting pressure on Washington to step in, to subsidize, deregulate, and, when necessary, rescue them. This strategy isn't new. Industries facing crisis often use fear to secure government protection. During the 2008 financial crash, banks called themselves too big to fail. Now, in 2025, AI companies are quietly making the same argument. Sam Altman, the CEO of OpenAI, once said that when something becomes large enough, the government inevitably becomes the insurer of last resort. It was a revealing statement, an admission that OpenAI and its peers see themselves not as risk takers, but as vital institutions that must be saved if things go wrong. That mindset changes everything. It means the same government that once funded the space race may soon be underwriting the AI race. And history shows what happens when private profit relies on public safety nets. Innovation slows, monopolies grow, and risk never really disappears. It just gets transferred to taxpayers. The public might not know it yet, but the lobbying has already begun. In late 2025, a letter from OpenAI's Global Affairs Office to the US government surfaced. The document urged Washington to expand tax credits, issue loan guarantees, and provide direct federal funding for AI infrastructure, all under the justification of countering China. In other words, OpenAI wanted the US government to act as its financial backstop. The numbers explain why. OpenAI is burning through cash faster than any tech company in history. Microsoft's financial filings revealed that OpenAI lost more than $12 billion in a single quarter while committing over $1.4 trillion to future data center projects. These are not sustainable figures. The company's model only works if new investors keep believing in infinite growth, or if the government steps in. The illusion of endless profitability is maintained by public perception. As long as the narrative of progress continues, the flow of capital doesn't stop. But if the market realizes that the AI sector depends on debt, subsidies, and hype rather than profit, confidence could vanish overnight. And when confidence goes, so does the bubble. While the United States debates regulations and subsidies, China is moving ahead with action. In less than a decade, Beijing has built the foundation for what could become the world's largest AI infrastructure network. In 2024 alone, China added more than 400 gigawatts of new energy capacity, equivalent to over 1/3 of the entire US grid. This expansion is not accidental. It is part of a national strategy that treats electricity, data, and computation as strategic resources, not private commodities. China's leadership views AI not as a product but as a pillar of economic sovereignty. This difference in philosophy has created a growing divide. American corporations rely on private investors chasing quarterly profits, while Chinese state-backed enterprises focus on long-term national stability. The result is that China's power grid operates at lower cost, higher efficiency, and far greater resilience. Its state-owned energy sector ensures that AI training facilities never run short of power. In contrast, the US faces an escalating electricity crisis where every new data center adds strain to an aging, privatized grid. Even OpenAI has warned Washington about an Electron gap, the widening divide in power capacity that could determine who wins the global AI race. If computation is a new oil, then China controls the wells, pipelines, and refineries of the digital era. If you follow the money flowing through the AI industry, the pattern becomes almost surreal. OpenAI invests in Oracle to build massive data centers. Oracle buys chips from Nvidia to fill them. Nvidia in turn invests back into OpenAI to guarantee future demand. The same dollars spin in circles, creating the illusion of unstoppable growth. Analysts call it circular finance, a closed loop where capital moves but value doesn't. It's a performance designed for Wall Street and media headlines, not for sustainable economics. This circular economy gives investors confidence while hiding massive debt underneath. Each partnership appears profitable on paper, but the system is recycling the same funds through layers of contracts, loans, and stock valuations. It's as if three friends were passing the same $100 around and claiming they each earned it. Bloomberg analysts have already compared this model to the pre-2008 housing derivatives, where financial products fed on themselves until the bubble finally burst. When you look closely, AI's so-called revenue explosion starts to resemble a giant echo chamber, a system feeding off its own momentum. Nvidia profits from chip sales, OpenAI gains valuation from its partnerships, and Microsoft presents the illusion of dominance through investment returns. But none of them represents actual net profit. Once the hype fades, what remains are inflated valuations, unsustainable debts, and a fragile system that depends entirely on the belief that tomorrow's AI will be worth more than today's. Artificial intelligence doesn't run on ideas alone. It runs on electricity. Every data center, every AI training model, and every query consumes enormous amounts of power. As the world's demand for computation grows, energy has become the new battleground. In the United States, most of the power grid has been privatized. Companies like BlackRock and other Wall Street asset managers are buying utilities, transforming public infrastructure into profit machines. When electricity becomes a commodity, costs rise for everyone, from households to tech giants themselves. Meanwhile, China has treated energy as a public necessity rather than a private enterprise. Its state-owned utilities operate under a long-term national strategy, ensuring constant energy supply for AI infrastructure. The difference is stark. Chinese electricity costs average around 8 cents per kilowatt hour, while American prices approach 19 cents. This gap determines more than comfort. It defines competitiveness. AI training isn't just about software, it's about power, both in watts and geopolitics. If the 21st century's oil was data, then the new energy race is about who can power that data most efficiently. Beijing builds, Washington debates, China constructs wind and solar farms at twice the global pace, while the US continues to close renewable projects under political pressure from fossil fuel lobbies. The irony is that the world's most capitalist economy is now paying higher energy prices to fuel the technology that could secure its dominance. And as AI expands, the very fuel it depends on may become America's next national crisis. Every economic bubble begins with belief and ends with reality. In 2000, it was the internet. In 2008, it was housing. In 2025, it may be artificial intelligence. The symptoms are identical: unrealistic valuations, speculative investments, and corporate leaders insisting that this time is different. But it never is. AI startups with no profits are valued in the billions. Publicly traded tech companies have price-to-earnings ratios exceeding anything seen before. The market has been living on anticipation, on the idea that AI will somehow justify its own cost. If the bubble bursts, it won't just impact investors, it could ripple through the entire global economy. Data centers built on debt would halt construction. Chip production would stall. Thousands of jobs would vanish overnight. Governments would face enormous pressure to intervene, claiming that AI is too important to fail. But history has shown that propping up a collapsing system only delays the fall. Artificial intelligence, born from human ambition, could collapse under the weight of that same ambition. And yet, denial continues. Executives have doubled down, promising that profits are just a year away, that scaling will fix everything, that the future will eventually validate the present. It's a familiar narrative, the same one heard before every major crash. What few admit is that the crash isn't a possibility, it's a process already in motion. Behind the numbers and political statements lies a story of people. While investors trade billions, ordinary workers face uncertainty. Automation threatens millions of jobs in transportation, media, and programming. The same technology sold as liberation is, for many, becoming a source of anxiety. Energy bills climb as AI data centers absorb power, once meant for homes and cities. The very progress promised to make life easier is quietly making it harder to afford. In cities across America, rising energy costs and inflation have begun to erode household stability. The cost of living rises faster than wages. Middle-class workers watch automation creep into industries that once felt secure. What began as an innovation dream is starting to look like an economic divide, a world where machines generate value, but humans pay the price. When bubbles burst, it's never the billionaires who fall the hardest. It's the families with mortgages, the workers with disappearing jobs, the students with rising debt. I was meant to close gaps in opportunity. Instead, it risks deepening them. The bubble, if it bursts, won't just reset markets, it will reset lives. As the AI race accelerates, the world is witnessing more than just a technological contest. It is a transfer of power, a silent economic shift from the West to the East. China's model of state-directed investment, public infrastructure, and long-term energy planning stands in direct contrast to the short-term, profit-driven system that dominates the United States. In Beijing, the question is how to build stability. In Washington, it's how to sustain growth that no longer exists. This divergence is reshaping global influence. While American tech giants rely on government bailouts and speculative capital, China's strategy is built on tangible assets, power grids, chip fabrication plants, and industrial ecosystems. The US speaks of innovation but struggles with fragility. China builds resilience and calls it strategy. The center of technological gravity is slowly tilting eastward, and the world is beginning to feel the pull. What happens next will define the 21st century. If the AI bubble in the US burst, the shock will travel far beyond Wall Street. It will expose an uncomfortable truth, that Silicon Valley's empire was not built on knowledge, but on credit. Nations that built real infrastructure will rise. Those that built illusions will struggle to stand. The outcome of this transition will not just decide who leads in AI, it will decide who leads the world. The age of artificial intelligence has revealed more than the potential of machines. It has exposed the fragility of the systems that created them. Every great leap in technology carries a mirror, showing us not just what we can build, but what we choose to value. Today's AI boom is not just an economic story, it's a moral one. The question is no longer whether AI will change the world, it already has. The real question is whether the people shaping this technology can change themselves before it collapses. If innovation becomes speculation, if progress depends on bailouts, and if intelligence itself becomes an asset class, then the next crash will not be a technological failure. It will be a human one. If this analysis gives you a new perspective, share it, discuss it, and think about what happens when ambition outpaces responsibility. Because when the next bubble bursts, it won't be banks we're rescuing. It'll be the artificial minds we built to save us.